I think we got to start with the jobs report coming up later today. What are your expectations? How do you see the market reacting to the numbers that we get?
I think the market's going to hold up. We've seen the economy hold up in many ways. One of my favorites is that ISM manufacturing actually beat expectations just a few days ago, and that's a broadening out of the economy. So I think we'll see a decent jobs number. And of course, earnings, 12% year-over-year growth in the S&P 500 with roughly 3/4 of the companies in. That's decent news.
What do you make of what we've seen with mega cap tech this week? We've seen some weakness, and still the markets are on pace for a winning week. Is that surprising at all?
It's an important broadening, but it is also a sign of risk. The tech sector is still in the red so far this year. So that's good news in terms of a broadening, but you're still talking about a tech sector that's over 30% of the S&P 500. We see the Amazon results that are a little bit of a disappointment. So there's clearly some risk there.
You're not the only one talking about that broadening. I think that leads us to your word of the day. What is it?
I'm going with mid caps. It is historically the sweet spot. It has outperformed large and small cap stocks over the decades. If you look at valuations, you're looking at 50 cents on the dollar for mid caps. That hasn't happened to small, even though small has also underperformed. Why? Because mid caps are showing up with earnings growth.
When we're talking about mid caps, a lot of times we talk about small caps. They're more domestically focused, a lot of leverage. What are the characteristics of mid caps that you think are going to make them work going forward?
Well, you also have a similar domestic focus. So you have 75% of revenues domestically. That's really important. But what you have is higher quality than the small cap front. Okay. On small caps, you have losses, you have negative earnings, all those things. You don't have them in mid caps.
All right, you got a pick for us. What's your pick for us today?
REGL. It's our ProShares ETF. It's the S&P 400 Dividend Aristocrats. People think about dividend growth in large cap, but it's incredibly applicable to mid cap. You've got them at a discount. You have a 2.7% dividend yield, and you have higher and stronger fundamentals than the rest of the S&P 400.
So is the idea here people are going to dividends as kind of a flight to safety? You're looking for income with a lot of volatility?
We're looking for quality, so it's dividend growth, not dividend yield. You don't have to go all the way into the cheap stocks, but consistent dividend growth is where you get strong balance sheets, high return on assets, strong earnings growth.